What if I told you there's a way to invest $25,000 in 2025 that combines growth, stability, and reliable income, even in a shaky economy? Sounds too good to be true, right? Well, it's not. In this video, we're uncovering why SCHD might just be the smartest investment choice for the year ahead. The future of the market might feel uncertain, with whispers of a possible recession and unpredictable swings in the economy, but that doesn't mean your money has to stay on the sidelines. Whether you're a seasoned investor or just starting out, this video will give you a clear and actionable strategy for putting your $25,000 to work. We'll explore SCHD's strong historical performance, why it thrives in turbulent times, and how its unique mix of dividend income and steady growth could help you build wealth with less risk. But here's the kicker. I'll also break down the best ways to invest, whether it's all at once or gradually over time, and how to make the most of this ETF in both regular and tax-advantaged accounts. By the end of this video, you'll not only understand why SCHD is a standout pick for 2025, but you'll also have a plan to grow your portfolio steadily and confidently. So, if you're serious about maximizing your money and securing your financial future, stick around. Trust me, you won't want to miss this. Chapter 1. SCHD's proven results and reliability. Let's begin by examining its performance history. SCHD has shown it can handle market ups and downs effectively. Over the past decade, it has averaged a remarkable 11% yearly return. This isn't just solid, it's exceptional for a fund focused on dividends. Even more impressive, its 5-year returns have grown further, reaching around 12% annually. These aren't just numbers, they highlight steady, dependable growth. Additionally, SCHD stands out for generating steady income, making it a prime pick for those seeking both security and regular earnings. With a dividend return hovering around 3.5%, SCHD provides reliable payouts, and this isn't just a one-off benefit. This ETF has consistently increased its dividend distributions year after year, making it an excellent option for building a steady income stream. Now, you might ask, what happens during challenging market conditions? This is where SCHD truly proves its strength. During the 2022 market downturn, while the S&P 500 fell over 20%, SCHD saw only about a 3% decline. That's a remarkable difference. In fact, SCHD's demonstrated its reliability during volatile markets, showing resilience both in times of growth and during economic slowdowns. This level of predictability in both payouts and performance makes SCHD a solid option for investors seeking a balance between growth and stability. It's not about chasing the biggest profits, it's about creating lasting, sustainable wealth over time. Chapter 2. SCHD's selection process and strategic edge. Let's explore what makes SCHD stand out. It's not just about impressive performance, it's about the smart, calculated approach it takes in selecting its investments. SCHD adheres to a clear set of criteria when choosing companies to include, and this disciplined method is a key reason for its dependability, especially in uncertain market environments like those we might face in 2025. Here's what matters. SCHD prioritizes companies with a proven history of paying dividends. Only businesses that have distributed dividends for at least 10 straight years qualify. But it doesn't stop there. SCHD also requires companies to have raised their dividends for at least 5 consecutive years. This provides added security because these businesses are not only staying afloat, they're excelling and rewarding investors with increasing profits over time. A major aspect of SCHD's stock selection lies in its focus on financial stability. It relies on key metrics, such as the ratio of free cash flow to total debt and return on equity. These measures ensure that the companies it includes aren't just paying dividends, they're financially sound and able to navigate challenging times. This becomes especially important if 2025 brings a recession, as some experts anticipate. SCHD's portfolio leans toward defensive industries like healthcare, consumer essentials, and finance. These sectors typically remain stable during economic downturns because healthcare, basic goods, and financial services are essential, regardless of economic conditions. For example, SCHD allocates a large share of its investments to healthcare and consumer staples, areas that have historically performed well during slow economic periods. Compared to growth-oriented ETFs like QQQ, which heavily invest in tech stocks and excel during economic booms, SCHD's emphasis on value stocks with steady dividends makes it a more cautious choice for 2025, particularly if markets become turbulent. Chapter 3. Expectations for 2025 and Market Outlook. Looking ahead to 2025, a key question is, what can you reasonably expect from SCHD based on current trends and expert forecasts? SCHD appears well prepared to provide reliable returns, even during economic uncertainty. Let's break it down. According to TipRanks, a top-rated investment research platform, the average 12-month price target for SCHD is estimated to be around $313 per share. This represents approximately a 9% increase from its current value, and that's before factoring in dividend payouts. This might not seem like sky-high growth, but SCHD isn't about taking big risks for huge rewards. Instead, it's a value-driven, dividend-producing machine. When you include its 3.5% yield, potential overall returns for 2025 could reach 11 to 12%, assuming the market stays steady. But here's the twist: 2025 may not be a typical year. Economic uncertainties loom, including the chance of a recession. The Federal Reserve has signaled potential rate cuts, pointing to slower growth and increased market unpredictability. This makes SCHD's cautious strategy even more attractive. As a value-focused fund, SCHD is less prone to the sharp fluctuations that growth-centric funds, like QQQ, might endure. If the economy slows down or contracts, SCHD's emphasis on stable, dividend-producing firms positions it to weather the storm better than riskier growth investments. History shows that during economic struggles, investors often turn to assets offering dependable income, and SCHD's regular dividends fit this preference perfectly. Still, it's worth noting that even reliable options can face temporary setbacks. In a downturn, SCHD's share price could decline, but its dividend payouts would likely soften the impact, maintaining its appeal for long-term investors focused on building wealth steadily over time. Chapter 4. Comparing SCHD to alternatives. When lined up against other investment options, SCHD's advantage becomes even more evident. Its mix of generous dividend payouts, reduced risk, and dependable results sets it apart as a top pick for 2025. How does SCHD measure up against alternatives like QQQ, JEPI, or individual dividend-paying stocks? Let's start with growth-focused funds like QQQ. QQQ has been a standout performer in recent years, fueled by tech leaders such as Microsoft and Nvidia. However, technology-heavy ETFs often thrive during bullish markets, and 2025 is looking to be a more cautious and uncertain year. SCHD's focus on value-oriented stocks offers a notable advantage in such conditions. Unlike growth funds that frequently reinvest profits to drive expansion, SCHD prioritizes delivering and increasing dividends, offering a stable income stream, even during volatile times. What about other income-generating ETFs like JEPI? JEPI might provide greater upfront payouts, but this often comes at the cost of losing long-term growth potential. SCHD strikes a better balance by combining a 3.5% yield with steady, reliable growth over time. How does SCHD compare to purchasing individual dividend-paying stocks? While owning individual stocks can be rewarding, it demands considerable research and exposes you to risks from sharp price movements tied to a single company. SCHD removes that worry by offering instant diversification, spreading investments across 100 companies in secure industries, such as healthcare and consumer staples. While every option has its advantages, SCHD's low management fees, defensive setup, and dependable income make it a standout choice for investors seeking both stability and growth in 2025. Chapter 5. Methods for investing $25,000 in SCHD. Now that it's clear SCHD is a solid option for 2025, let's dive into how to invest your $25,000 wisely. The way you approach this decision can significantly influence your long-term outcomes. So it's essential to align your plan with your financial objectives and time horizon. One of the easiest methods to invest in SCHD is through a single upfront contribution. This means placing your entire $25,000 into SCHD all at once. If you trust the ETF's dependability and aim to let your investment grow over time, this could be a promising option. However, if you're uneasy about market timing or the risk of short-term declines, investing a lump sum might seem intimidating. That's where the dollar cost averaging (DCA) strategy comes into play. DCA involves committing a set amount at regular intervals, regardless of how the market behaves. For instance, instead of allocating the full $25,000 immediately, you could invest $2,000 each month over a year. This approach reduces the impact of price swings and minimizes the risk of buying at high levels. Over the long run, DCA helps you accumulate more shares when prices are low and fewer when they are high. Another advantage of DCA is its psychological benefit. It eliminates the worry of trying to perfectly time the market. It also enables you to steadily increase your stake in SCHD while enjoying consistent dividend payouts along the way. If you're using a tax-advantaged account like an IRA or Roth IRA, you can further enhance SCHD's benefits by avoiding taxes on its dividends. For example, in a Roth IRA, all dividends grow completely tax-free, giving your investment an additional advantage. Whether you decide on a lump sum or dollar cost averaging, the key is staying committed to a long-term plan. SCHD's combination of stability and income makes it an excellent tool for gradually building your wealth. If you're looking to strengthen your financial position for 2025, SCHD could be the investment to help you get there. Thank you for watching. If you found this video valuable, don't forget to like, comment, and subscribe for more insights on growing your money. Your journey to financial freedom continues, and I'm excited to be part of it. Here's to your investing success. Profitable investing.